And welcome to the Expert CRE Secrets podcast, also streaming on Capital Gains Tax Solutions podcast. Hey, I'm your host, Brett Swartz. In each episode, I'm bringing on some of the best real estate, financial, wealth, and sometimes insurance minds in the world where they share their ideas, deal stories, and inspiration. So together we can grow more wealth, defer more tax, and so that you have more options for anything that you're in with regards to commercial real estate or business sales. I'm excited about our next guest. He's out of Illinois in Chicago area, and he founded Financial Asset Protection after learning about the infinite banking concept known as bank on yourself concept. He saw this opportunity to save retirement accounts and real estate properties and businesses from market failures and other risks. He believes the number one rule to your money is to make sure it lives somewhere safe and accessible. And he states when working with clients, it's never an either or situation. It is a both and situation. And so please welcome to the show with me, Sari Ibrahim. Sari, how are you doing?
Hey, Brett. Good. Thanks for having me on. I appreciate it.
Absolutely. For our listeners, get to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, definitely. Like you mentioned, I run a company right now called Financial Asset Protection, and our main focus is using the infinite banking concept, also known as the bank on yourself concept, primarily for real estate investors to become their own sources of financing and to grow their wealth. This journey started about 6 years ago when I was doing my MBA, and I kind of was looking for different jobs. I wasn't really sure what I wanted to do. I got a concentration in project management. I thought I was going to be a project manager, but after taking those courses, I didn't really click that well with that subject. I got into sales and marketing for different insurance companies, and that was like my calling. I don't know how, but that was like my calling. I enjoy talking to people. I enjoy talking about money, and I started to realize that people were also comfortable speaking to me about their financial issues, and I wanted to make a career out of this. So I read a lot of books. I read a book called The Bank on Yourself Revolution by Pamela Yellen that talks about the bank on yourself strategy. And then at the end of that book, there was a section that said if you wanted to join the program as an advisor, I applied, got accepted, and then started the company. And I'm a bank on yourself professional, and I've been doing this for a few years now, and it's great. I love working with clients. I love talking about money, talking about mitigating risk, talking about becoming your own source of financing. And this is why I wanted to be on the show today, to talk more about this concept and how it can help a lot of people.
Cool. Awesome. So I believe we've all been given certain gifts in this life. Some people call these strengths or superpowers. I think they're God-given gifts and be given to us to be a blessing and help to others. So I want you to go back to maybe your high school days, maybe your college days, when you're getting your MBA, your younger days, I want you to think about maybe one or two gifts that you believe you were given, and how does that help how you help and bless people today?
Yeah, so one gift I think I was given is just listening. I've always listened more than I spoke. I'm more comfortable listening to people than speaking. So I think that's, in my eyes, I think that's a gift. Just being, and I think it makes people very comfortable. Without that quality or without that gift, I think my job would be a lot more difficult than it is. So I'm very blessed to have that, to have that quality and to be a good listener, because I actually enjoy listening to people.
Awesome. Love it. So now let's jump right into the show, unconventional real estate funding strategies. So let's just talk what the top deal story when it comes to commercial real estate investing and funding using your strategy. Can we start with the deal story? What was the outcome? And then we can kind of reverse engineer to how we got there. So what's the best one for one of your clients when it comes to financing commercial real estate with your strategy?
Yeah, definitely. So, just to be clear, there's many ways that you could use this. One of the most recent ways that I remember that I recently worked on, I think that was the best, was client sold one of his properties. He had about $400,000 in cash, and then he bought a single premium whole life policy. That's like a one-time payment whole life policy. It doesn't require any more payments after that. And then he instantly had about $375,000 in cash value, and he also had life insurance at this point above $580,000. So now he could essentially buy commercial real estate or residential real estate up to $375,000. And then that number keeps growing every year. So let's just say, for example, he bought a property for $300,000. He's now his own mortgage. He makes those payments back to himself. Both the asset he bought, the real estate, as well as the whole life policy would both appreciate in value. So he just turned one asset into two assets. That's one story that I've recently worked on.
Okay, make sure I unpack that. It sounds kind of cool. So he sold, had cash of $400,000. So
Yes.
he purchased a whole life insurance policy. After fees or closing costs or whatever, it's worth $375 is the cash value.
Yes.
Although the life insurance, if you were to die the next day, it would pay $875, all tax free.
Yeah.
And then that $375, he can get a loan to go buy another real estate asset or up.
Yes.
Am I following? Did I miss anything there?
Yeah. The only thing is that the death benefit was $580,000.
Oh, 580. Okay, I missed that one. Okay.
Yeah. Yeah, but right, yeah, he would be able to borrow. He would be able to leverage the cash value, borrow against that, and use that to buy anything, whether it's real estate or anything else that he wants. There are no restrictions on what he could use the money for, which is a key point of this.
Okay, what are the restrictions?
There are no restrictions. He could use it for business purposes.
Oh, there are no restrictions.
Yeah, no restrictions. Yeah,
got it. Okay, so it can be business, it can be personal, doesn't really matter.
Exactly.
But you can borrow against it. And in the meantime, that cash, $375 on average, what do you think it's growing at for this particular client?
Yeah, on average over the lifetime of the policy, it's going to grow about 4 to 6%.
Okay, 4 to 6%. Got it. And then of course, what he's going to borrow at. What could he borrow at?
Sure. When you borrow, if you're borrowing at 5% simple interest,
okay.
So over like 4 years, it would come out to about 1.9% APR. But that's how this actually works. Is that it's a good question, because the way this works is when you borrow and you're paying back, the growth of the policy outweighs what you're paying into it. So now you have this split or this arbitrage between the cost of capital and what you're earning in the policy, which is another benefit of using. Because some people ask, like, why do I have to borrow my money to use? Why can't I just withdraw it and just not pay any interest? And the reason why is because when you borrow against it, you don't interrupt the growth of it. So the growth outpaces the cost of capital to use the policy.
Cool. So let's take it on a 10-year term, right? Because you said it's compounding at 4 to 6%, right? Yeah. On the 375.
Yeah.
And let's just say I borrowed 300 out, right?
Yeah.
Kept 75 in there. And you said it's 5% simple interest over like a 10-year term.
Yeah.
What's the arbitrage on average? Let's say it did 6, would the arbitrage be an extra 1, 2, 3% because it's compounding versus simple interest?
Yeah, I wish I knew this right off the top, but usually I would compare the cost of the loan as it accumulates versus the cost versus the growth of the policy. Mm-hmm. But typically, yeah, we could see that 2 to 3% arbitrage, the difference in between the cost of the loan versus how much it gained over time.
Got it. Okay, so 2-3% difference is the arbitrage, and then I wonder too. The one that comes to my mind is just inflation, right? Inflation's kind of been crazy. So I don't know what your feedback is for that. If inflation's going so far up, I guess you could make both arguments that if you're borrowing, right, you're paying back tomorrow's dollars that are inflated. So that's not bad. Mm-hmm. But if you're at 4.4 to 6, like the opportunity cost, right, of that 400,000 into something that's producing, let's say 6, 7, 8%. Plus appreciation, plus depreciation, right?
Yeah, yes.
So give us the argument or counter to that to say, I'm like, hey, I could take this 400 and put it as a down payment, or I could put it into the life insurance policy, borrow against it, and then put that as a down payment.
Yeah.
Am I capping, if I'm only going 4 to 6 with no depreciation and no appreciation, right? It's just I'm capped out there.
Yeah.
What's the counter to that?
Well, it's like when you mentioned, when you're talking about my bio, you said, I help with not either or strategies, both and strategies. Mm-hmm. And that's what this concept is about. It's about, connecting 2 different assets together or even multiple assets. Mm-hmm. So yeah, definitely. Because it makes sense, right? Like that's a valid argument. Like why do 4 to 6% in the whole life policy when I could do, 8% or 10% somewhere else, arguably, and that's the point of this. It's not supposed to replace other investments. It's supposed to be more of a savings vehicle. I think the only thing this is really supposed to replace is a savings account and the way you finance deals. I think ultimately that's what it's meant to replace, but not meant to replace any investments. It's actually meant to enhance investments by providing you liquidity to be able to use at any time.
Cool. No, I like it. I mean, the numbers I'd really have to see like 100 unit complex purchase when somebody did this versus borrowing from Fannie Freddie at, 3% or 3.25%, and 5-year fix. I'd like to see some case studies of like someone who's done this strategy for 10 or 20 years, right? And then like a side-by-side comparison of, hey, I borrowed from the bank or I put it into the insurance policy and I borrowed here. And then of course, let's not forget about the life payout, right, of 580. And I imagine is that growing over the time period? So,
that's also growing
in 10 years, what would the 580 life insurance payout be?
It'll probably be around 700,000 in
5 years. And then how about 10 years?
let's see, 700,000, probably, it grows pretty exponentially. I want to say probably closer to 900,000.
Okay. Yeah, and now of course that depends on your health, right, and your age and different things like that. Correct?
Exactly. Yeah. So somebody who's 7 years old does this is going to be completely different than somebody who's 30 years old. Yeah.
Right.
The death benefit is entirely based off of
Cool.
age and health, as well as the initial contribution amount.
Cool. What's the biggest false belief? Because I brought maybe a couple of these here, right? Because I'm still really learning about this. I have a level term, just level term for the family, right?
Yeah.
And then I invest in commercial real estate. That's my love. And then we have clients that do deferred sales trust, and they're investing in some insurance policies, in some stocks, bonds, mutual funds, some real estate. It's kind of a mix. They're diversifying. So, but what's like the biggest like false belief that if you could tell me or the audience, like what is it, and how do you overcome it?
Yeah, definitely. So, biggest false belief is that just to initially compare term to whole life, they have different functions and different purposes, right? So, term is just like straight life insurance only, and then whole life has the cash value component, and it's for your whole life. But I think that a false belief is just to run those two together and then say like, all right, you know what, which one's better for life insurance? I think from that perspective, it's probably going to be term only, because it's just life insurance only. It's going to cost you less. But, I think that it's important to identify your objectives and what do you want to use. I think whole life insurance it's not about the title of it, just buying a whole life insurance policy. I think it's about the function of what it could actually do for you when you use it for real estate, when you use it for investments, with the tax deferred part, the income tax free, death benefit, all these other parts that are happening that you could use it as a tool. I think that's one of the biggest misconceptions about using whole life, is that it's more of a tool that could be used for different things rather than just the title of it.
Excellent. No, I appreciate that. And by the way, I make sure I pronounce your name correctly. So it's Sari Ibrahim. Is that correct?
Yes, Sari. Mm-hmm.
Sari. Okay, yeah. Sari Ibrahim. And you can find more about him at finassetprotection.com. That's FIN assetprotection.com. Very cool. So personally, are you investing in real estate? Curious. I'm sure you have your whole life insurance policy as well going, right? Like kind of give us what's kind of your strategy personally for yourself.
Yeah, definitely. So I have 2 whole life policies right now, and I'm in the process of being a limited partner or a passive investor in real estate. That's kind of the route I want to take. I don't see myself doing really active real estate investing, nothing against it, but I prefer to invest in somebody else's deal through either equity or through private money lending, where I'm actually loaning money out using my whole life insurance policy. So to kind of give you an idea of like some of the numbers I have estimated right now, I'm going to borrow from my policy, loan that out to a real estate investor, and then he's going to take that money obviously and use it for renovations and for down payments and other factors, other areas that he needs that money for. I'm hoping for a 10% ROI every year on that money, and then to make money that way, and then also to keep earning compound interest in the whole life policy. So when I go to access the money from the whole life policy, I'm not interrupting that growth. I'm borrowing against it, so that asset keeps growing, and then I can invest in the real estate. I don't have to do any work. I don't have to do anything actually. All I have to do is just move money from point A to point B. So I'm becoming a fan of passive real estate investing and private money lending.
Got it. So you've got 2 whole life insurance policies, and then one of them you're borrowing against it to put into LP positions into some commercial real estate, hoping to get 10% there. But in the meantime, what you're borrowing, even though you're borrowing against it and you're paying, let's say, the 5% interest on that, you're still compounding it 4 to 6 on the entire amount. That doesn't stop. But on the 10, you'll pay the 5, and then you'll keep an extra 5. Is that a fair summary? Did I catch that right? Did I miss anything?
Yeah, and I'm going to run this by my accountant, and I'm also going to try to get a tax deduction on the interest I pay to the insurance company because I'm using it for business purposes. So that's kind of tricky. I don't want to be quoted on there, but check with your tax professional. There are ways to deduct the interest that you borrow from the insurance company to you. So if that's the case, I borrow at 5, sell at 10, and still can get some deduction in between that split.
Cool. Yeah. All right. You got a plan. You're executing it. You're taking action. You're diversifying. You're doing different things. Curious, why 2? Why not just 1?
Why 2 life policies?
Yeah.
Oh, because I started one about 3 years ago, and then as I'm making more money now, I started another policy. So each policy that you start typically has some max limits to it for tax purposes, something called a modified endowment limit or modified endowment contract limit, a MEC limit. And I reached that limit for the first one. So now I'm making more money and then I applying it to another policy. And it's very common for people over their lifetime who are using infinite banking to have like 15 policies. You know, they've been making more money and they're maxing out, and kind of like it's similar to real estate, how you can have like 15 properties. You know, each one is being maxed out. So similar idea to that.
Got it. And are you required to take any distributions, like any minimum required distributions, and or when you take distributions, are you paying ordinary income tax on that?
Yeah, so you're not required to take any distributions from the whole life policy. And then typically the way the taxes work is that the growth of it is tax deferred growth. And then in most situations, as long as it's a non-modified endowment contract on non-MEC policy, then the gains in it can come out tax free because you've used after-tax dollars to pay for the policy. And under current tax law, the gains are tax free. And then the death benefit is income tax free. So that's kind of the tax way. The only time the gains could be taxable as ordinary income is if it's a modified endowment contract, a MEC policy, in other words.
Okay, excellent. By the way, you can learn more all about that and dive into the weeds at finassetprotection.com. Scheduled time with Sorry, right?
Yes.
Yeah. Okay. Ibrahim. Sorry. The way it's spelled, Sarry, by the way, and look him up on LinkedIn or Instagram or Facebook, right? Cool. So, all right. Well, let's shift now, right? I think we hit that pretty good. Yeah. Let's shift a little bit into commercial real estate experts, right, who are helping their clients. I believe the whole industry is changing, right? Mm-hmm. The value proposition of agents is switching from brokers just selling and buying to becoming like advisors, right? Yeah. Where it's more than just selling and buying a property. It's capital gains tax deferral, it's income tax deferral, it's estate tax planning, it's perhaps getting some diversification, especially as clients get older, right? So being aligned strategically with experts like yourself or in other industries can help you bring more value to your clients and close more deals. So what would you say to the commercial real estate expert out there, and how are you working with those currently?
Yeah, definitely. I like how you said that it's more of an advisory approach. It's more of solving some problems, not just selling real estate, but more of actually solving some problems like the tax benefits. Yeah. So one thing I would tell, or mention to the broker is that, how much are you paying in interest to other lenders? How much are you paying, and how much is your tax exposure going to be in the future? Also, consider inflation, which you mentioned earlier. Take into consideration all these things and try to solve them one by one. And typically, this could all be done through infinite banking, through tax deferred growth, usually the tax-free income that comes out of that, and the ability to be in almost a 0% tax bracket in retirement. So many different ways, and I would kind of address the current problems or current potential problems that one could face taking some ordinary conventional routes when it comes to financial planning.
Excellent. Now let's shift into the 1031 exchange, if you're familiar with that, or the biggest frustration with capital gains tax deferral and the sale of highly appreciated assets. I'm curious, any thoughts on that? Like if you have any friends selling crypto or high-end primary residences or commercial real estate or businesses, what's been the biggest frustration when it comes to selling high, having a huge capital gains tax and trying to defer it?
Yeah, definitely. So I am familiar with the 1031. I don't work in that space really. One thing that I did speak to a client recently, he said that he prefers not to do 1031 for some reason. He said that because he's rushed to buy in order to defer the defer the capital gains tax. But for the most part, I think it's a good idea, right, to not pay taxes on the gains and to keep rolling into other properties. I think that's a smart thing to do. The only thing is that, and correct me if I'm wrong, Brett, but one problem right now is because real estate values are so inflated, they're so high right now, I think that's going to be a little bit tricky, right?
Yeah, 100%. We call it the shotgun wedding, right? You get engaged in 45 days, you got to get married in 180. And it's kind of like the Blockbuster way of doing things. You show up on a Friday night and you're trying to get that movie, but it might be rented out, or even if you get it, you have 3 days to return it. You have to drive in the snow if you're in a cold weather state, and back and forth. And then a thing called Netflix came out, right? And there's no more timing restrictions. You can buy and sell real estate whenever you want. You can move funds outside of your taxable estate. And you can also diversify. You can buy some insurance. You can buy some stocks, bonds, and mutual funds. You could do ground up development. You could also just buy commercial real estate. I mean, you could do so many things. Start a business, right? Hard money lending. Yep. And that's the transformation when people knows that, I don't have to deal with the toilets trash liability.
Yeah. Yep.
The Gavin Newsom new rent control laws, the eviction moratorium, or whatever else. You're just 67 years old. And you're just ready to be retire, to have a little bit simpler life. That's where the deferred sales trust comes in. By the way, you can learn more about that at capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com. All right. So all that being said, are you ready for the lightning round?
Yeah, let's do it.
All right. Knowing what you know now, if you could go back to your 20 or 25-year-old self, what's the one golden nugget to make sure to tell yourself to do?
Yeah, just always do it. Just execute. Don't really care about the result right away. You won't know until you actually execute. So don't worry too much about the details. Just take action.
Excellent. Second question. What's the number one book you've recommended or gifted the most in the past year?
Rich Dad, Poor Dad for sure.
Excellent. Third question. What are you most curious about?
I'm most curious about just becoming like a billionaire. Like I want to know how that works. All the what happens when you make that much money. What do you do? Like I'm very curious about that.
Cool. Second to last question. The number one leadership quote or theme that you strive to live by.
So Mark Twain said that a banker is a fellow who will loan you his umbrella when the sun is shining, but wants it back the second it starts raining. So never really rely on banks for funding. Kind of become your own banker.
I like that. I love that. That's also part of why the crypto world is exploding as well. People are like, I get tired of certain asset classes and want some change and some freedom, flexibility. So, cool. Last question. After all your success helping the people you help, curious, how do you stay centered in your values, and how do you stay encouraged to charge forward to reach new heights?
Yeah, I definitely try to 10x all my goals. So I never want to really reach my goals. I want them to be, much bigger than they actually are, and kind of always pushing myself to do more. Almost like I want to push myself to do more on autopilot, where I'm doing more without even realizing it.
Excellent. Love that. For our listeners who want to get in touch with you, would you mind one last time, what's the best place for them to find you?
Yeah, so the website, finassetprotection.com, is the best way. You can go there. You can schedule a free 15-minute call with me. You could connect with me on LinkedIn, and you can check out the YouTube channel and the podcast, Thinking Like a Bank, our show, all from the website, finassetprotection.com.
Amazing. Thanks so much for being on the show. And also thank our listeners for listening to another episode of the Expert CRE Secrets podcast, also streaming on Capital Gains Tax Solutions. Hey, we're here to try to bring you value from really smart people doing different things in the real estate world, insurance world, finance world, leadership world, also that you can create and preserve more wealth, defer more capital gains tax, and or help your clients do the same. I encourage you to go to expertcresecrets.com and or capitalgainstaxsolutions.com to learn more about the deferred sales trust and ways to grow your business and level up how you're helping your clients. Thanks so much for watching us or hearing us today.